Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Monday, November the 7th. The year's 2022. Let's talk trading. How much is enough? Part 4 with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal's. Walmal, how much is enough? We've talked about various things, but we need to kind of round it out by talking about position size. I think a lot of traders, especially when they start out small, if they're only trading for, a dime a pip or 50 cents a pip or $1 a pip, if they make 20 pips, that's only $20, and that might get you a couple of Starbucks coffees or something. And so they might have a tendency, they might want to start trading a full lot, and the next thing they know, their account's gone.
Yeah, exactly. And that's the thing. And by the way, $20 won't get you a couple of Starbucks coffees and may get you one these days. but you're right. You got to be really careful with and how much is enough. With the title of this entire series. How many lots are you going to trade? How many minis or micros are you going to change? You're going to trade, rather. Well, it all comes down to one simple thing. It always comes down to the first thing you figure out is how much of my money am I willing to burn in the street? How much, if I go and take it and throw it out the window, I'm not that you won't be upset, because anytime you lose money, that can be a heartache. But at the same time, it doesn't put me in a position where it messes with the way I think, the way I act, what I do. So for instance, if you think about it this way, if you're walking down the street and there's a hole in your pocket and a penny falls out, 1 cent falls out, at the end of the day, you probably won't even notice the 1 cent fell out. And that's what your risk level is, and you just got to figure out where that top level is, and the way you figure that out is that how much am I willing to go and lose out of my account? That's a factor. The second factor is, when does it become a psychological barrier for you? So for some people, that psychological barrier, maybe $1,000, maybe $500, maybe $100, maybe $10. I don't know what it is. Everybody's going to answer that question themselves. That's a personal question that you have to figure out. Once you figure that out, okay, now you know that level. The second level is how much you're willing to lose on any particular trade. And my rule of thumb is you don't lose more than 1% of your account on any particular trade. That's my rule. And what I then would go and say, okay, now which one is the lower number? If your psychological number, let's say your 1% is, let's say you had $1,000 account. Okay, your 1% is $100, $10 rather. So you're willing to go and lose $10 based on that 1% rule, but you're willing to go and lose $300. That doesn't bother you to lose $300. Well, guess what? You choose to lose $10 because you take the lower number, because that's what's going to go and keep you in the game long enough that you can take that $1,000 account and grow it. And like we talked about last week, yeah, you may only win 10, 20, $30 on a trade. And I'm going to go and say, that's where you're at. And that's okay. That's currently at this moment in time, that's where you're at. And what you do is you go and, you just keep on building it, and you just build it. And eventually, let's say we were able to do that. And all of a sudden now you got a $2,000 account. You're still willing to lose $300 because that's your psychological limit. But now, if you got a $2,000 account, well, now you can go and lose up to $20 on a particular trade, which means you can go and trade twice as many lots, and you just keep on building it and building it and building it. Eventually, you'll actually get up to the point where your psychological limit's $300 and your account size is big enough that you're willing to lose $300 based on the 1%. But I also know what will happen is, over time, that $300, as you become more confident in what you're doing and you become better at what you're doing, that $300 will rise in rate, and the reason why is because you'll realize that, hey, if I'm winning the majority of the time, and I'm making more money than I'm losing. If I go and risk a little bit more money, I can make a little bit more money. And I will go and, key in on that word there, little. Okay, that's the important word, is little more money, because what you do is you don't do big aggressive changes. That's what will get you into trouble. No, you increase it a little bit by a little bit by a little bit, and that's it's sort of like the old story about the tortoise and the hare. Who won the race? It was the tortoise won the race. The hare, he may have potentially gotten there quicker, but the thing is, the tortoise was able to make it because he didn't run out. He didn't run out of his steam. He didn't run out. He didn't get exhausted. He didn't get sidetracked onto all types of schemes here and there and scams and whatever else may come along the way. And that's just how I look at it.
Right. Yeah, because one of the things is trading is a something that you're going to be doing for a quote unquote long time. And so, the outcome of one particular trade in reality shouldn't really affect your account too much one way or the other. And because, what you want to do is you just want to build up over time. It's like you said, it's the tortoise versus the hare. You want to take those incremental steps forward day by day. And it's almost like trading's almost like exercise, in the sense that when you first start out and you stick with your exercise plan, you really don't see any results, after a week or after a couple of weeks sometimes. But then all of a sudden one day, after you take your shower and you're drying yourself off and you look in the mirror, you go, whoa, what's that? And all of a sudden you see muscles. And that's the same thing with your account. If you're in there and you're making, 10, 20 bucks a day on your little $1,000 account, and a couple months down the road, you go, whoa, I got a couple of grand now.
Yeah. That's exactly right, and that's just how you go and build it, And if I'm just going to put that warning out there for especially newbie traders, that if you don't do that, what you said in the very beginning of this video is absolutely true. If you go and build it up too quickly, next thing you know, you're going to be going and trading an account size or making trades of too many lots, and you may be in a good trade, a trade that ultimately, let's say you get into a trade and ultimately it goes and wins 10, 20, 30, let's say even 50 bips. But the problem is, before you actually got there, it actually went against you before it got there. And because you were trading so heavy, well, guess what? You got shut out. You had a margin call done on you, because what happened was that you were now risking more money than the money that was in your account, and you're done. And now you're saying, how could this happen? I have $1,000 in my account. I now got $0 in my account. And worse than that, the trade that I was in was a good trade. I did everything right except for the most important thing. I didn't go and manage how much I was risking. I went and put too many lots on. Would you rather have gone and had the shot for getting, let's say, going and doubling your account, okay, not knowing whether or not you're going to do it, but a 50-50 chance of doubling your account, or guaranteeing, that you're going to go and lose your account? Which option do you take? Well, I go and take the option that I guarantee I don't option, which is actually the third. I take the option that I guarantee that I don't wipe my account out, because I can always get into next account. Next time I go in there and have an account of either $990 or $1,010. I'd much rather be in that position than $0.
Right. That's exactly right. And just noticing some things, I flashed through the charts for the traders. You can see we're coming out of that upper rat zone for the rat traders out there. And on the gap fill traders, the gap did fill. So anybody who took that trade, they benefited. And we are back into the opening range for the month, which there was a crossover at 1436. And the inside bar break to the north was at 1410. And I called these out or mentioned these trades last night. We have 187 pips on the day right now of range on the pound. That's high to low. And once again, you can see where it filled that gap about, let's see, 1, 2, 3, 4, 5 hours ago. It came across that weekly open and shot up like a rocket. And we were looking at the pivots. And the Bambino Flex indicator said near the pivot, go long. And it was right. The pivot trading plan said if you're near the pivot, the bias was long. And we hit that pivot at looks like about 112.99. And it took off from there. So that was worth a few. Right now, it'd be worth 150 pips if you were still in that trade. So we took out the daily, we took out the weekly, and we've taken out the monthly. So pivots are cleared. We went through the upper wick zone there, no looking back at 1381. And looking at the high, low, low, high, looks like we've actually got a lower high trade that just rocketed through at 1450 because it looks like we got back down into the launch pad. And there was pips to be picked up there. If you were quick, you could have picked up about 2 or 3 pips. And let's see, we're hitting the ATR zone. We made a new high for the day this hour at 114.76. So it looks like we came down through the psychological 75 area. But how much is enough? That's that really is I guess one of the things that traders have to come to grips with. Probably, when it comes to brain management, that might be even bigger than FOMO.
Oh yeah, absolutely. You got to manage your expectations. You got to manage what your brain is. And part of the expectations is, we all have these, ideas that we're going to become wealthy or whatever, and that's the hope, right? Or at least be able to provide for a living.
Delusions of grandeur.
Yeah, exactly. But the reality is that you got to go and be able to there's going to be a bottom side to everything. There's risk, in everything we do, there's some type of form of risk. And so we have to be willing to realize that and adjust for that and make that part of our business plan.
Exactly. Right now, I'm looking at a 1 hour chart. And if you look at these hour ranges, most of them are over 20 pips over the last 4 or 5 hours. They're all over 20 pips, with the lowest being the last hour at 27. So there's definitely been some great price movement. And when I look at the stats, it reminds me of the 2008, 2009 go-go years of Forex trading. So just have to be able to recognize what price is doing, adjust accordingly, and I guess not be too greedy. So once again, the fastest 15 minutes trading's almost over. And so I'd just like to say thanks to the traders who watch my videos, who hit the like button, who subscribe, who come back on a daily basis, especially some of the new traders over on the Reddit thread and the also on the Facebook group, the TheRumpledOne Facebook group. So, fellow traders, tomorrow's election day, red news for the USD all day, according to the economic calendar. And we're just going to have to see what happens. And just remember, when you're at your trading platform, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.